Welcome to this Killick Explains video, and welcome to a topical topic which is all about property prices and why they're not helping first-time buyers. Now, the theory goes that in a property market where prices are falling, and they are falling pretty much wherever you look, and in both what's called nominal, that's ignoring inflation, and real, that's taking inflation into account terms, sales volumes are down overall, so it's a difficult market to sell in. Where are all the first-time buyers? Now, people sometimes say, surely falling prices are finally good news for first-time buyers because they need less equity to buy. I mean, if a property is on the market for £100,000 and it falls to £80,000, you need £20,000 less equity, bank of mum and dad, your own reserves if you like, and more likely if you've got a mortgage, obviously taking out a mortgage for £80,000 beats taking one out for £100,000. So in theory, they're more affordable because prices are falling and there's more choice. All these stories about buy-to-let landlords struggling at the margins, offloading 1-2 bedroom flats and so on. So they're cheaper, there's more choice. What's the problem? Well, there are several. And this is why it's a deeply frustrating time potentially to be a first-time buyer. And I have empathy here because it's frustrating when prices are rising because you're going to priced out, but it's equally frustrating now prices are coming down for a lot of people. Why? Number one, mortgages are much harder to get now and they're more expensive. Lenders worried about the state of the market, worried about negative equity, which we'll come back to in a moment, are being less generous and they're making mortgages more expensive. I mean, just a few years ago, you could get a mortgage rate, depending on the style of mortgage and who you are, of say around 1%, possibly even lower. Now, 5, 6, 7, 8 is the norm, depending on the style of mortgage, whether it's buy-to-let, first property, who you are, how much equity you've got, and so on. But there's no doubt about it. You know, all other things being equal, mortgages are a lot more expensive. Secondly, it's all very well saying to a first-time buyer, well, look at all these one-bedroom flats coming onto the market, why don't you snap those up? But in fairness, you've got to be very careful as a first-time buyer to try and get the right property because you're not going to want to have to flip it and get rid of it in the short term. And buy-to-let landlords don't always offload their best stock first. That's just a fact of life. Unfortunately, they'll tend to keep back the family silver, if you like, and sell perhaps the more marginal stuff. So it's a bit patronising to say to a first-time buyer, well, snap that up, that sort of horrible little damp one bed. And thirdly, first-time buyers are facing some of the economic certainty the rest of us are. That's job uncertainty, a cost of living crisis where everything seems to be still rising in price despite inflation coming down a bit. And of course, as a first-time buyer in particular, this is true all the way up the ladder, you don't want to overpay. In other words, there's this temptation to wait. I mean, hang on a minute, if prices are falling, if I wait 6 months, presumably the same property will be cheaper. And I don't want to overpay because of something called negative equity. Now, negative equity is one of these bits of jargon that the industry likes to use. Just to remind you, let's say a property is currently valued in the open market. These things are a little bit subjective, of course, at £100,000. The mortgage you've taken out to buy it, because basically you bought it 2 years ago, is 110. How come, Tim? Well, of course, the property was more expensive 2 years ago, so you had to take debt out to match. That leaves you in negative equity, as it's called, the 100,000 value minus the mortgage of £10,000. It's called negative equity. Now, the opposite, of course, is positive equity, and that's where the property is worth more than the loan you've taken out to fund it. And the reason it's a problem is it can be really difficult to move at all in negative equity. Depends on the exact lender and so on, but it can make any sort of movement quite tricky, and it's pretty stressful as well because you think, well, if for any reason I couldn't carry on paying the mortgage, the property, if it was liquidated, wouldn't even cover it. So if you're a first-time buyer, faced with falling prices, faced with rising mortgage costs, what can you be doing? What's the right approach? Well, first of all, take a long-term view. I mean, yes, eventually property prices will start rising again. I don't have a crystal ball as to when, but I suspect it's not going to be anytime soon. The economic backdrop is quite tricky. There's a lot of job uncertainty around. As I've covered in other videos, there's uncertainty around equity markets and so on right now. So you can afford to take a long-term view and think carefully before jumping onto a cheap property what you need. It does make sense to buy the biggest property you can afford to in some respects, because that way you won't have to move in the near future, but think about what you can afford as well. And some people do some quite clever stuff, young buyers. They'll buy a property they can just about afford with more rooms than they need and then rent out chunks of it so they can live in the property and sort of flat share, if you like. And rentals, as plenty of people waiting to buy a property note, their cost are very high right now. So it's a case of balancing up carefully what you need against what you can afford. And don't get talked by clever selling agents into overpaying or buying more than you can afford. Be as organised as possible. Get all your ducks lined up. Make sure you check your credit reports. Get your mortgage offers lined up. Okay, make sure you're in a position to look like an attractive buyer as and when you decide to pounce. And if in doubt, wait. And what I mean by that is don't be too choosy as a first-time buyer. If you really do want to get onto the property ladder, everyone has to compromise when it comes to things like property assets. But equally, don't just jump into the first thing you can see and afford simply to get onto the ladder, because you move in haste, regret at your leisure would be the cliche there. Okay, so there you have it. Slightly gloomy theme, but needs to be covered. So if you want to find out more about this kind of topic, Killik.com/learn is not a bad place to go. If you want my property-specific videos, do feel free to email me. If you can't find them on YouTube, that's editor@killik.com. For a copy of any of my guides, some of which touch on property, there are actually 6 of them. Again, editor@killik.com. And occasionally Confidant, the quarterly magazine, does address property, but I wouldn't say every quarter. And again, getting repetitive, editor@killik.com for that one.